there are two other classes of assets: digital currencies like stable coins, and there are also digital securities that are issued by entrepreneurs and companies. The regulators are going to shut down the digital securities. There's not really any support for them. And there's not any support for digital currencies either. They don't want large amounts of dollars to circulate outside the control of the US banking system. So of the three asset classes, the one safe haven for institutional investors that has the most regulatory support is Bitcoin as that king digital commodity. I expect that the rest of the crypto industry will continue to rationalize, and these other assets will gradually be decapitalized over time.
Michael Saylor, the executive chairman of MicroStrategy and a staunch Bitcoin advocate, believes that the cryptocurrency industry is approaching its end both within and outside the United States. Saylor predicts that the ongoing regulatory crackdown on crypto securities and currencies will worsen, leading to their complete decapitalization and exit from the U.S. market. He expects this process to unfold rapidly, potentially encouraging institutional investors to overcome their doubts and allocate a portion of their portfolios to Bitcoin. Saylor's viewpoint aligns with the SEC's recent actions and statements. The Director of Enforcement at the U.S. Securities and Exchange Commission stated that the crypto industry is built on noncompliance, necessitating a shift in regulatory strategies. The SEC perceives the cryptocurrency industry as prone to unregistered securities offerings, leaving it susceptible to further collapses of significant value. The outcome of lawsuits against major players like Coinbase and Binance will significantly shape the future of the cryptocurrency industry in the United States. Despite a forthcoming hearing on SEC oversight, it is unlikely to curb the regulator's determination. Saylor highlights Bitcoin's unique qualities and its potential as a long-term investment instrument, emphasizing its ability to offer an alternative to the inherently flawed fiat system.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Well, Bitcoin represents the only universally acknowledged form of digital property in the world. So if you're looking to own a piece of property that you can move to 100 different countries where everybody in every country is going to want it, and if you want a piece of property that people will want in 100 years, Bitcoin represents that universal global asset. There's no building, there's no stock, there's no company, there's no commodity that will last 100 years that you can move from country to country. So for global citizens that are looking for wealth preservation over the next 100 years, and they're not quite sure about the economic policy of any country or about where they'll be, and they want something scarce, desirable, that some affluent person is going to want to buy from them no matter where they end up, Bitcoin represents that asset. Well, I think that there's universal acknowledgement that Bitcoin is the king digital commodity. It's an asset without an issuer. And so for that reason, the regulators in the US aren't bothering it. I think the key to keep in mind is over the past 2, 4, 6, 8 years, Bitcoin is outperforming gold, silver, bonds, all currencies as a monetary inflation hedge. So if you live in the United States, the US dollar has been losing 7% of its value every year for 100 years. And over 100 years, you lose 99.8% of your value if you don't switch to a scarce, desirable asset. But if you live in another country, Turkey, Argentina, etc., in many cases, I think the Turkish lira has lost 96% of its value against the US dollar in just 20 years. So the real key is to switch out of the weak currencies, whether it's the lira, the Lebanese pound, the Argentine peso. But switching to the dollar is only a short-term solution, because holding the dollar more than a few years will cause you to suffer monetary debasement at the hands of that currency. So Bitcoin represents a way to buy a property that's going to go up in value. It's going to appreciate faster than the monetary inflation rate of either the dollar or local currency. And the other thing that's very appealing about it is you can take custody of it or place it with any number of international custodians. And of course, you can't really easily take custody of any other asset. So if you want to eliminate counterparty risk that comes from having all of your assets with a bank, or having all your assets in a single country, or all your assets denominated in a single currency, Bitcoin is a way for you to exit economically from that system and from those counterparty risks. The thing that backs Bitcoin is 400 exahash of digital power. To put that in perspective, that's as much power energy as the entire US Navy uses in its fleet, about 12.5 gigawatts. And also, it's a fleet of 5 million Bitcoin ASIC miners spread everywhere in the world that generate so much hash rate that if an AI took over every computer on Earth, all the smartphones, all the computers at Amazon, Google, and Microsoft, all of those computers couldn't dent the Bitcoin network. It's an extremely powerful digital energy network. And because of that, you don't have to put $1 billion in a bank that's run in Lebanon or Argentina or the US or Turkey. You can put the $1 billion onto the Bitcoin network, and the Bitcoin network is nation state resistant. If all of China turned every computer against the Bitcoin network, they couldn't stop it. And so Bitcoin represents a new way to store your assets, and in fact, the most secure computer network in the world.
During his interview, Saylor emphasizes that Bitcoin's current role is not to replace a country's local fiat currency or the global currency, which is currently held by the US dollar. Instead, the executive chairman of MicroStrategy views Bitcoin as a long-term investment tool with two significant functions. Firstly, it can be held for decades without the fear of losing its value, making it suitable for passing down to the next generation. Secondly, it can serve as a safe haven if there is a swift collapse of the local fiat currency or even the US dollar, an event that may occur faster than anticipated. Additionally, Saylor discusses another important functionality of Bitcoin, which is its contribution to securing cyberspace. He highlights that Bitcoin operates on the world's most secure and robust digital network, making it instrumental in enhancing cybersecurity. In summary, Saylor sees Bitcoin as a long-term investment option that provides protection against debasement and potential economic collapses. Moreover, he recognizes Bitcoin's role in bolstering cybersecurity through its strong and secure network.
I think the key to keep in mind is that every citizen of the world needs 3 types of money. They need local currency, like you need the Turkish lira in order to pay your taxes and buy things locally. They want the world currency, the US dollar, to buy things internationally. And then they want a property that they can give to their children and their children's children that will last 30 years or 60 years or 100 years. Bitcoin represents the property. The US dollar represents the world reserve currency. And then your local currency is determined by the jurisdiction you live in and what your local taxes and your local expenses are denominated in. You don't need to replace the local currency, nor will you. And it's not going to replace the dollar either. What it's replacing is that building or that farm you are going to buy or that company you are going to invest in, or a bar of gold. And compared to that bar of gold, which is not going up in value in dollar terms, Bitcoin is actually outperforming by a factor of 100 or more. So Bitcoin represents that long-term asset, not your checking account or your near-term local payments. We live in a world today where AIs could spin up 100 million fake Michael Saylor accounts. And there's no cost to create a Twitter account or create another fake account or create an email account. So it's important that we actually have some way to anchor your account into cyberspace such that you have some substance. And the approach with Bitcoin is to take your credential, say your identity, your public and private key, burn the public key onto the Bitcoin blockchain, which is the most immutable, incorruptible, indestructible, immortal database in the world, and then use your private key in order to sign your transaction. So if I wanted to digitally sign this video interview to prove that it was me, or if I wanted to digitally sign my Twitter account, or my WhatsApp account, or an iMessage account, or my email to prove it's me, I could use a private key that's linked to the public key on the Bitcoin base layer. And as I said before, if you wanted to corrupt that database, you would need an entire nation and you would still fail. And so whatever's on the Bitcoin base layer will be there in hundreds of years, even long after nations and companies fail. That's why Bitcoin represents this immutable form of truth. And it's more important than ever to have that veracity, because an AI could actually be a better version of me. It'll work a million times harder, and there'll be a million versions of them. And you're not going to be able to tell the difference unless you've somehow registered your cyber credentials on an indestructible, immortal, incorruptible database.
Binance US, a major cryptocurrency exchange, recently reached an agreement with the U.S. Securities and Exchange Commission amid the regulatory crackdown. The agreement nullifies the SEC's motion to freeze Binance's assets and introduces enhanced transparency measures for its operations within the United States. As part of the consent order, Binance will limit asset control to 2 U.S. domiciled companies affiliated with Binance US, ensuring proper custody of customers' fiat and crypto assets. The agreement has drawn significant attention, with John Reed Stark, the former chief of the SEC's Office of Internet Enforcement, describing it as unprecedented and onerous. Compliance with the agreement is demanding, as Binance must provide an exhaustive list of accounts and wallets managed since December 2022, disclose financial institutions involved, and report asset transfers over $1,000. Moreover, Binance and its CEO will have no direct or indirect access or control over the assets. This agreement sets a crucial precedent for the regulation of the cryptocurrency industry in the United States. It establishes rigorous transparency and oversight requirements that could influence how other crypto entities are regulated in the country. The Binance SEC agreement's implications for the industry and the feedback on Michael Saylor's interview can be shared in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.